Welcome back to Stocklabs Market Recaps. We are about 3 weeks into January 2023. And market was kind of cooled off a little bit this past week from sort of the rally off the lows that we were seeing. Mostly we expected that. We had been overbought from the week before on the market in Stocklabs, and kind of, we got a choppy-ish week. Basically started up with some continuation, but then kind of took a bit of a uh, sharp dip. I think like Tuesday, Wednesday, Thursday, or Wednesday, Thursday, something. It was like about 2 days in the middle of the week, and then on Friday we got a another rally that made it most of the way back from the midweek dip, but still kind of left the market kind of relatively unchanged for the week. So leader was the Nasdaq, up 0.6. I think Friday was, I can see it here. Yeah, Friday was up 3% almost. So, the big rally on Friday got it just into positive territory. S&P was down 0.75%. The small caps, IWM, was down 1.1, and the Dow was kind of a big loser, down 2.8%. Not sure which components were sort of dragging this. Might have been banks, might have been something, I don't know. I'm not going to guess. But yeah, Dow was the big underperformer for the week. Crude oil, pretty stable, up 2%. Seeing some calls from big banks saying that crude is done. Crude is like basically finished. You know, these guys were very bullish over 100. It dropped back down 70, 80, something like that. They're all bearish now, and I mean, we'll see. I have kind of thought since last year that the crude trade was more or less finished. I mean, yeah, there'll be a bit of a range, but it'll be the prices more normalized, I guess. EEM outperformer, up 9/10. I think this EEM has been doing actually pretty well. I mean, although I know probably about half this ETF is just packed full of Chinese stuff, so just be careful with that, because as we know, about 90-95% of the stuff comes out of the Chinese market is, a scam, more or less. Okay, so back to our leadership stocks. We have, I hadn't looked at these earlier, but okay, it was a good week for these ones actually. So Tesla was up 8%. So this big bounce for Tesla, back over 130. I think it was down around, I think it was down under 100, like maybe 2 weeks ago, less than 2 weeks ago. So this has been a pretty sharp bounce in Tesla. Google had a nice week, up 6.5%. Nvidia up 5%, Netflix up 2.8%, Apple up 2%, Amazon underperformed, down 9/10. Microsoft kind of in line with the Nasdaq. Meta up 1.7%. Meta's been having a good, it's maintaining its rally that's been ongoing for several weeks now. Layoffs coming in from a lot of these companies. I think Amazon announced on the retail side, and maybe some other segments. Not sure if specifically cloud stuff, where that's sort of the growth engine. Google, big layoffs. I think 10, 12,000 people. Not on this list, but I think Salesforce is also laying people off. So I mean, seems like the tech industry is recomposing itself a little bit, adapting to, they got ahead of themselves hiring people, and now they are cleaving some of the excess, if they're not forecasting that they're going to have like the growth potential or any of this stuff, anytime soon, then yeah, they let the people go and maintain profitability and all this stuff. So, I mean, corporations, they'll take care of themselves before, they're worried about maintaining any kind of headcount. So that's that. Expect more layoffs in sort of like this sector, tech. I mean, I don't think Apple announced anything yet, but all of these guys tend to act the same way. So, I wouldn't. It's not like they're just going to lay off 10,000 people and then hire them right back 2 months later. I mean, it's kind of an ongoing. It's usually an ongoing process. Multiple rounds of these stuff usually happens. So, yeah, we'll move on. Industries were okay, not great. The utilities got smacked around, down 2.5% on a median basis. Industrials down 1.8. Consumer down 1.8. Healthcare only down 0.8. Outperformers were financials, flat, and tech was flat on a median basis, which Nasdaq was up because all those TerraCap and gigantic stocks were up, but median tech stock was flat on the week. It didn't really go anywhere, so nothing to see there. Basic materials flat-ish to down, despite crude being up. Gold has also been doing pretty well. So I mean, the stocks themselves are not following the commodities at this point. Um, some people say that the equities of the basic materials, which is what this group is, it's more or less forced to catch up to the commodity, which may or may not be true. I don't know. I mean, a company has a lot more things to consider than, they have capital costs and all of this stuff. Subsector wise, not great. Not a single one up 5%. So pretty thin, at the top. And on the downside, also pretty thin. So, okay, drug delivery was down 8.7%. I don't know what's in here. Can look. What was down big this week? I'm curious about what is in this group. Okay, whatever this is, SRDX, EYPT. Okay, some things got hit this week, but it's whatever. Other than that, there wasn't a whole lot to see here. I mean, some of this stuff is more like, okay, EVs gave back a little bit of the recent rally. This was like a leading sector on the upside, at least once this year for the week. Yeah, I mean, nothing to draw from this. General weakness, but not anything that assertive really. So I wouldn't worry about it too much, especially since there's a pretty big rally off it's a pretty strong rally off the lows week before last. So this was sort of the action, sort of the type of tape that at least I was expecting coming into the week. So it's really not anything to get bent out of shape over at this point. We have the performance by market cap. And okay, this was a split. Let me get rid of this. We got 1 to 5 billion, down 43 bips. 5 to 10 billion, down 42 bips. 10 to 50 billion, down 50. I mean, it's kind of, you can see it's pretty, everything's kind of the same. Down 44 bips on 50 to 100, and 100 billion plus, down 93. Okay, this is a little bit slightly surprising. Let's see here. Sort by market cap. Okay, JP was down a lot. J&J, bad week. Walmart, bad week. Looks like Procter had a bad week. Yeah, I mean, there was some stuff. Pfizer had a bad week. What's Pfizer down to? Pfizer's down to 45. I mean, it's kind of not great. Yeah, so it looks like, the NASDAQ really got carried by those few, like, uh, very large cap weighted stocks. The rest, I mean, anything over 100 billion was down, even more than, it's down more than the S&P, less than the Dow. I guess it was, the losses were concentrated in the Dow components, but still, not not that good. Let's look at intelligence for this week. It's going to be a little bit curious to see what Stocklabs thinks of trends that are materializing. So we've got short Dow for this week. We've got bull utilities. Okay, utilities had a pretty bad week this past week, so Stocklabs looking for a little bit of mean reversion there. And we've got oil equipment and services, energy exploration and production, and ultra short Dow. Okay, so we've got two short Dow ETFs. So, maybe, well, let's look at the downside first, and then because this is kind of a sparse list again. Like we saw a lot of sort of the fourth quarter in 2022. Whoops, not downside. Where did that go? Okay. Okay, UVXY rated bearish. So bearish vol. Dust is bearish. Gold miners is bearish. So bullish gold miners this week. Regional banks. Okay, bearish banks. Biotech bear ETF is bearish. So bullish biotech. NRGD bear. Bear big oil is bearish. So bullish big oil. And okay, North American tech. This is probably like almost identical to any NASDAQ ETF. AI something. And okay, UVIX is bearish. Oh, and also UVXY is bearish. That makes sense. Okay, so yeah, I mean, kind of like the mix between, what intelligence is showing here. I mean, it's basically saying that, you should probably just prepare for chop in general for the week. Bearish, mostly like real economy type stocks, and maybe a slight bullish bias on things like tech, biotech, anything that's more of like a low rates play or whatever. But anything that's kind of would be extra sensitive to a formal recession, I would stay out of. So like banks, no good. Consumer stuff, no good really. You can see we came off this overbought condition in the last week. You're kind of getting back up to it. Now, this signal is the one that we are currently working off. I think this runs out on Monday or Tuesday. So after that, we'll see where everything is. But yeah, I mean, for this week, I think, probably you're going to see a similar week to last week. It doesn't look like the downside is like, it doesn't look like the downside is materializing in the tape yet. I mean, people are still sort of eager to buy dips here in the first month of the year. So, I mean, I think you're going to see the same thing. Probably you'll see some dips if there's, I don't know, dips around economic releases or whatever. But then, you'll see people come in and want to put exposure on and buy them up. I mean, I don't know if they're going to push it like, really extend a rally, but they're willing to buy on down days, what it looks like currently. So yeah, I would expect, early in the week. Early in the week, maybe I think actually you'll see some couple up days, months, like slight up days, then a dip, and then market gets bought back again. And in general, it just chops around. Nasdaq should outperform this week. That's where I would focus on long stuff, or biotech could be interesting. Um, but yeah, I think you're looking at choppy week, but a pretty tradable one should be pretty active. So yeah, that's all from me. Hope you guys having a good start to 2023 so far, and yeah, be back next week to check it out. Almost after this week, we almost through the first month, and whatever the thing was, as goes January, as goes the year, we'll see if that plays out. So far, it's been halfway decent January. So, but all this recession stuff is sort of still looming. But we'll worry about that another time. So I'll talk to you guys later. And bye.